Hey, Mike Swanson here. As you know, I've had a good couple weeks in the stock market, that's for sure, and big surges on Friday and commodities and global markets all over the place. And I got stuff that's up a lot, 30%, 15%, 14, 15, 9, all over 9%, 5%. I only have one position that's actually down, and it paid a big dividend, and I'm actually up from holding it from losing the $97. But anyway, one question I'm getting a lot from people, and this is one example, quick question from this fella. Do we wait for a pullback to buy more, or are these going straight up for a while? It seems like most everything is beginning to take off. I'm especially interested in more EWO. In EWO, that's an ETF for Austria, really super undervalued stock market, and it was up 2% on Friday. Now, what I want to talk to you about is I think we are going to get a pullback in one final good investment buying opportunity, and I want to explain what I think is the best way to buy into these markets and navigate them over the next couple of years. I think what we're seeing in gold and European markets, not the S&P 500, but these other markets, are the start of big new bull markets that are going to last for a couple of years. And that's why while the S&P 500, for example, is up 4% on Friday, and it did make a new high for the year, these other markets were up 3%, 4%, some even 5% in one single day. They're up a lot more than what the S&P 500 was up, even though it's at new highs and everyone's seeing that and getting caught up thinking about that. These other markets are up a lot more. They've gone up a lot more the past couple of weeks, and they're, I think, beginning new bull markets. And here's the thing, what I want you to think about, how bull markets work when they start is you usually get these big surges, giant rallies up, which is what we're seeing, and they usually that big rally usually lasts for about a month, anywhere from 3 to 6 weeks. Afterwards, you get a dip and a pullback, which in a sideways period, which altogether usually lasts about another month, and that provides a great entry buy point. And then you get a blast off again, and then the bull market matures, and you see more sideways trading action. For example, let's look at the S&P 500. In 2009, when the stock market bottomed there, it surged in March and made a peak around late April, June. But it had this giant blast-off surge, and then it paused for a couple weeks, and that would have provided a great entry point. In fact, back then I missed buying here and ended up buying some here and made some money. But this provides a great safe entry point, because what happens is when you're buying before the bottom, you're kind of guessing and hoping the bottom's going to come. And then it does come, and hopefully you can get in here and start building a position. But once it blasts off and pulls back, you know that what's happened, you've seen the trend change, so you can buy with confidence and so forth. And that provides, I think, a final great investment point, because you can still find stocks paying high dividends, you can still find cheaply valued stocks, but just as importantly, after that, pause comes in. Normally you don't get any more pullbacks that take you below that entry point through the duration of the rest of the bull market. So that means you can basically buy and not worry about having things come back down and correcting, where you're going to get a loss, even if it's just a paper loss. And after that, after a year into a bull market, usually you get these sideways periods punctuated with thrusts up, okay? And that's basically what we've seen go on this year. We saw the market correct last year, then bounce up and made a new high, and then came back down, and now it came up, and it's making a new high again. But when these new highs come in a mature bull market like we're seeing for the U.S. stock market, you don't get these giant rallies of 20, 30% or whatever. You get, nice moves, and you come back down to a new sideways pair, then a nice move. So it makes it tough to buy new positions to just invest and hold in a mature bull market. They become more of a trader's market. And really, the best time to invest is at the start of a new bull market. So right now, I don't advocate investing in the U.S. stock market to hold. Even though I do think the bull market's going to continue for another couple years, I see investing outside a lot more attractive. You want to invest in markets that are starting new bull markets and that are undervalued and just have a lot more potential upside. And these markets are going through this upward thrust that starts a new bull market right now. I don't think that thrust is going to end. I think most likely it's going to continue for another couple of weeks. But I think in October we will see a pullback in gold and European markets that, and I'm not saying this is, if you're in, you should be scared at all. I don't think, you should worry about selling at all if you're already in. But if you're not in or you want to buy more, I think you should wait for a pullback to do so. And I think that pullback will probably happen in October, and maybe in November, but somewhere in October, November, there'll be another buy point. And I think that'll be the last investment buy point for these markets as I define an investment buy point. Now, let's think about, let me show you another example of how I think this stuff works out. This is a chart of gold, okay? And gold broke out. Gold's been in a secular bull market now basically for 10 years. And during that time, we've seen several year-long consolidation phases or bear phases. And we've seen that from August, the last one being, starting August, September last year, and it basically ending last month. And now we're starting that breakout phase. And I think it's very similar to what we saw in 2005. And usually with gold, there's a seasonal trend too, where these breakouts happen in August, September, and then October you get this pause pullback, which is really fast and sharp. Doesn't last very long, but it provides that final good entry point. And afterwards, usually you see gold go up for the rest of the year and into the spring. I think that's basically what's going to happen in these markets. So I'm looking at this real carefully because I'm thinking about myself too, not just you, but I'm thinking about trying to get as much money together as I can and put it in my account to do some buying and adding on in October or November. But I think this is the way to think about things. We're like in this situation here, we're probably going to get this little dip here. We can buy then, and then boom, 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 boom. We'll have another few years of these bull markets. Another way to look at it too, I think, is let's look at the HUI. If we look back to 2005, it bounced up. I think that's what's going on now. I think the HUI is going to bounce up above 500, maybe even up to 550, like it did here, and then have a sharp pause and just go up, up, up. So we're in this upward rocket blast off right now. Big gains that you saw last week and on Friday, and I think that can continue. Then we'll get a sharp pullback and then another launch. Okay. The thing is, I think the bull market's going to continue, as I said, for several years. But if you buy in this opportunity now or on the next pullback, I believe that we won't see the gold stocks come down to the levels here or the entry point in October, November again for several years. But if you wait and you buy, say, next year in a pullback or the year after that in a pullback, you can easily have a pullback afterwards where things do get to where you got in at. For example, if you look in 2005, right, we got that blast off, but then the things went sideways, right? Just like we've seen the S&P 500 go sideways at times, then you had it go up. So that doesn't mean I don't think you should sell during these times. But it's important, I think, to get stuff now that's paying dividends, that's cheaply valued, so you can have big gains, and during these sideways periods continue to make dividends. And I think there'll eventually, in a couple of years, be a manic phase. That's usually what happens in the final phase of a bull market. The first phase is what we're seeing now, this big thrust up. The second phase lasts a couple of years where you get sideways moves, followed by thrusts up, like we're seeing, basically experiencing in the S&P 500 this year and the past 2 years. And then you get a final manic thrust up phase like you saw in 1999 with the stock market, internet stocks. But I don't think that's going to come for some time. So that's the way I'm thinking of things. And if we look at Europe, there's European markets also in that situation. If we look at Greece, okay, if we look at Italy and Spain and Russia, this is a chart of Greece. And this black line, that's Italy. This is Russia back below here. But these have been in vicious bear markets for several years. The Greece stock market topped out in 2007. And I think they're starting new bull markets. We're having big thrusts up. And I just think like the gold stocks and commodities, they'll probably pull back in October, November, in the fall, provide another buy opportunity point, an investment point, and then just go up from there, okay? And that, after that investment point, after that big thrust up in a bull market, you get that pullback, final investment point. Usually you get a rally that lasts 6 to 12 months, then you enter that phase, that middle phase of a bull market of sideways action. And the overall trend is up, but you get long sideways periods. So now is the time to be invested or plan and get ready to buy on a coming pullback. I think it won't start from higher levels, but in October, November. And we talk now. So bottom line answer, what everyone's thinking about. Yes, I think we'll get a pullback. I think it'll come from a higher level from where we are now, and I think it'll provide an entry point in October or November in commodities and in cheaply valued markets, starting new bull markets. So now I want to digress a little bit and talk about margin, because I'm using margin, and I think margin is a tool to use only if you want to invest, only at times like this or on that next pullback. I don't think you should buy stocks on margin or even continue to hold stocks on margin after you're in the middle, once you're in the middle phase of a bull market. So what I'm basically planning on doing is I'm on margin now, but I plan on trying to be as invested as I can, gathering as much money as I can, and maybe potentially increasing the margin I'm on that, using that buy point. I think will come in October, November. But if things work out the way I think they will, after that buy point, we'll see these markets rally up into the spring, and at that point I plan on getting off margin. If that means selling positions, some positions, I'll do it. If that means adding cash into my account to eliminate the margin, I'll do that too. Whatever the case, I'm going to get alpha margin, that's my plan, in the spring, and just be 100% invested or whatever. I'm not saying I'm going to sell everything and go to cash. That's not what I think is the thing to do either. But I don't think one should invest in margin for years on end, but only use it at times like this, at the start of bull markets. So that's my thoughts on that. And actually, there's a lot of other things you have to consider too. I'm not advocating you use margin. All I do in these videos is tell you what I'm doing, and I don't think it's really appropriate for the average investor to use it. I've been experiencing these markets for a long time. Not everyone has that kind of experience. And there's a real important thing you have to consider when you use margin too, and you're borrowing money from your broker to buy more stocks. So there's two things that can happen when you do this. You can make a lot of money, or you can lose a lot of money. You're increasing the risks in your account by doing that. But there's another thing you have to consider, and that's the fact that because you're borrowing money, you're paying interest, okay? And you need to check with your broker to see what interest rate you're going to be charged. Now, I just did a quick Google search. That's why I edited the video here. And I found this article. It's a couple months old, but it's got this chart here of May the 1st, okay? These are the margin rates different brokers are charging. So E-Trade, for example, is charging 8%. Interactive Brokers is charging 1.63%. And I actually have an account with them and with E-Trade. And the more money you borrow, the less these people charge you. But that's a huge thing you have to consider. And honestly, it's very, very difficult to buy stuff and try to hold it for a year or whatever, or even a couple months, and get whacked for an 8% interest rate off that position. You've got to be expecting to buy something that's going to go up more than 8%. That's tough, you know. Now, if you're buying a utility stock that's paying a 10% interest, a higher rate of interest than what you're being charged by the broker, well, that helps. And that's why it's important. Another reason it's important to try to buy stuff that's paying dividends. It just helps. So I wanted to make a quick comment about margin. I don't recommend you use it. I'm using it at the moment. It's not something I permanently plan on using. And I can't see how anyone, it's a tool, right? And I don't see how anyone can invest for years on end using margin, because at some point you are going to hit a correction. You're going to experience a 10% correction in the stock market, or even a bigger bear market. And if you're on margin while that happens, that can be pretty devastating to an account if you're on a lot of margin. So anyway, just wanted to talk to you about what's happening in the stock market. It's an exciting time when you see the start of new bull markets. It's something that only happens every couple years, and it's where the real money is made in the market is by investing at the start of a big move. And you get this initial thrust up at the start of a bull market that usually lasts 4 to 6 weeks. Then you get another pullback in a period of sideways, usually lasts a month, that can provide a final great entry point. And we're not seeing that at the moment, but I do believe it's going to come probably in October, November. And that's, at this point, I think, what you need to prepare yourself for. And I can't tell you what to do individually. All I can do is show you what I'm doing and tell you why I'm doing it. You can take this video, and send an email to your investment advisor, broker. Tell him to watch it. Tell him that there's new bull market starting overseas, and you want to take advantage of that. And how should you do it? And come up with a plan of your own. Because everyone's different. Everyone has their own individual needs with their investments and personality and whatever, and how to handle things and what's appropriate for them. So that's really what you need to think about. Do you believe that we're starting these new bull markets like I do? And if you do, how do you want to take advantage of them? Okay? That's what you really should be thinking about right now. Not like searching out a stock pick, or trying to buy some course on trading options or buying some crazy thing, but really sitting back and seriously thinking about what you're doing with your money and what you need to be doing in planning to take advantage of what's happening. Right now, I'm going to just tell you what's going on with most people. And when I say people in this case, I'm not just talking about individual investors. I'm talking about the hedge fund guys, the institutional investors. They're seeing that S&P 500 break out last week to a new high, and they're worried about that. Okay, they're worried about, the market went up and I'm not in it enough, or I just can't believe it, and they're getting nervous. All right, they're worried about that, and it's dumb because right now the money to be made is elsewhere. The potential. The S&P 500 has been in a bull market since 2009, and Europe. Several European markets have been in bear markets for several years, and they're starting new bull markets right now. And we're seeing gold in stocks and in mining stocks. We've seen them go through a bear market for a year, and judging by the action and what you've seen the past 6 weeks, what we've seen together, new bull markets are starting. Okay? And that's what you got to think about. Don't worry, these things are up. Some of these things are already up 10% in a few weeks. That doesn't mean you have to chase things up in the sense that you have to buy after a 5% gain in a stock or a market. There's one day last week where the Greece stock market was up 5% in a single day. Look, FCX was up 8%. This is Friday. FCX Copper Company was up 8.5% on Friday alone. The Russian stock market was up 3%. The Greek stock market was up 4%. Okay, Austria was up 2%. Portugal Telecom was up 3%. TI was up 8%. These are all positions I own, but the point is, stuff was up a lot in a single day, and it's tough to just tell. I can't do that. I feel very uncomfortable to buy something after it's up that much on a single day. I'd rather just, I'm not buying tomorrow. I'm going to wait. I like to buy after pullbacks, and after, so that's what I'm doing. That's what right now I'm being patient. I'm going to tell myself I'm waiting for the pullback I think will come in October, November, and I'll buy on that pullback if it happens. If it doesn't happen, well, shit, I'll just enjoy the gains that'll keep coming, but nothing goes up forever. And I've watched markets for years, been in markets, invested for years, traded for years. Experience counts for something, and what it enables you to do is not be all nervous and scared, and have a game plan and come up with one, and that's what you do, and that's how you invest with confidence. And you don't get all scared and worried. You plan things out. You understand historical market patterns. You understand that the things to invest in are cheaply or when they have low valuations, and starting new bull markets. So anyway, we're in this together. I'll keep, I just wanted to share these thoughts with you on today, and plan things out. Think. That's all you got to do. Talk to you later.